tariffs are, I think, as significant now as death and taxes. They're coming. They'll be significant. It was kind of the premise that Mr. Trump started decades ago, and Mr. Lighthizer pointed out, former trade representative, in his book "No Trade is Free." And the only thing that really lightened up on tariffs early in the year was when the U.S. stock market dropped 20%. Then the Trump administration pulled back for 90 days. Now they're coming on hard. Stocks are at record highs. He's completely emboldened to do what he said he's been doing forever. And it's just a matter of how high and how far and how much pain it'll take. So yes, the market should care. We have tilted over to crude oil. Crude oil is in a bear market. We've had this recent bounce on a supply scare, and all it did is embolden the responsive sellers to come out and sell, and the hedgers who can hedge their production to sell. You can see that in the backwardation, and I just don't see what stops it. So it looks like a pretty good peak around $80 a barrel, and Brent, and it's 69 now. I just have to point out we're going back to the average price from 2019, which was around $64 a barrel. It's just a matter of time we settle in and stay below that level. You basically have to do that to get below the cost of production. In the US, that's around 50 something dollars a barrel to shut off these excesses of supply and decrease in demand. Now we have demand declining from China, certainly from imports. We have US gasoline demand is stabilized. It's somewhat stagnant at levels below 2019. And supply is increasing, as you see from OPEC. That's just a classic bear market. You get bounces, you sell. It's a question where it ends. And I'll end with this. I think the most significant thing is we're seeing this deflationary forces from crude oil and somewhat inflationary from copper. I think copper is more at risk to tilt towards crude oil. And the number one factor for everything is that buoyant U.S. stock market. So if it gives back a little bit, it'll head lower. And our chief equity strategist, Gina Martin Adams, says her manic mode model is quite extreme, which means the stock market risks are down, which means risks are down for most crude oil and the U.S. stock market.